Silver getting pounded today. All of the metals taking quite a drubbing.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. We're recording Tuesday, close to or about an hour away from the end of the trading session. And as I'm sure you're likely aware by the time you're listening to this, silver getting pounded today. All of the metals taking quite a drubbing, and quite fortunate on this day to have David Smith, senior analyst of the Morgan Report. So he's hanging out there with David Morgan, thinking silver all the time, and fortunate to have David join us, give some insight and perhaps some thoughts on how to handle things like this. So David, it's great to have you here. And how is everything going with you?
Well, it's going real well, Chris. I'm watching my portfolio balance decline sharply, but I'm also kind of calm about it because I would rather see this interim pain go on than to see us go vertically to $35 and collapse back to 16. So it's healthy. It's going to shake out a lot of people, and it's going to be very painful to people, for those who bought in the last week or so. But this is what Mr. Market does.
Yeah, well, that is certainly true. And I find that how we handle and the way we put things in place to respond to things like this is often what makes a big difference. And I guess, first of all, what are your thoughts on what we've seen the last couple of weeks? I mean, it took 4 years for silver to hit $20. Then in the span of 4 weeks, it went up to 29. It just went down another dollar since you and I started talking. It's down $3 about 10 minutes ago. Now it just dropped. It's below $4, right around 25. Could you expand a little more on how you handle this and any thoughts that might be helpful for people today?
Well, you know, I look at the Fibonacci numbers, and you can see a two-thirds retracement down to around 2250. So that sounds like the end of the world, but that was the breakout area. And oftentimes the retest, whether a stock breaks out of a triangle that has built for many years, or something like this where, you know, $22 held for 4 or 5 years, that's very healthy to come back down there and see how that works. And it's an opportunity for people that have not added all of their tranches yet to go in and add some more. And if you're new to it, you're being given an opportunity. Instead of buying at $29, you might be able to buy at 24 or 22. But it's a matter of buying in portions rather than going all in thinking that you know where the bottom of the correction is, because none of us knows that until later. And it can be really scary, but it's also enlightening. And if you believe in the long run bull case, this is just the first of a number of big corrections like this that we will be seeing. So get used to it, expect it, and welcome it as an opportunity of a cleansing that will take out a lot of people that aren't prepared or that unwisely went all in on a certain price point.
Well, I love that you mentioned that, especially been reading a poker book, as people have been hearing about. And I love the analogies where, you know, sometimes maybe you have the guy dominated. There's only one card in the deck that can save him. But if you're playing long enough, eventually you're going to have those times where they hit that card. And, you know, related to silver, I mean, perhaps it's good just to expect that there are going to be big pullbacks. Again, if somebody had gone on vacation over the last month and they left when silver was $18 or $19, they look up and say, wow, it's $25. It's interesting how much the day-to-day can affect the mindset. And I don't know, I would think going forward, especially if we do expect silver to continue climbing, you'd almost equally have to expect that it's probably not going to go in a straight line. And really how we process days like today can really make probably a bigger difference than you even imagine. Would you agree with that?
I totally agree with that, Chris. And you know what's happening when a stock or a metal price starts to make a larger move, it starts trading in bigger price blocks. So for example, you might have seen 10 or 15 cent moves intraday, then you start seeing 50 cents and then $1. And now we see a $4 move. But I can tell you, if we're going to see 3-digit silver over the next few years, which I believe we will, I'll guarantee you that we'll be seeing $10 intraday moves on silver at some point, and that will become almost the norm. I can remember in 1979 when silver was trading for about $8 and it went to 50. I was doing futures and I called up my broker one day and I wanted to get back into the mini 1,000 ounce contracts. And we were seeing, I think, $28 silver or something like this. And I said, what is the price risk that I have to do on this? Where should I put my stop? He said, you have to accept at least a $4 risk. And we've been trading in 10 and 15 cent moves. So that's what we're going to see. We're going to see a couple $100 moves in gold, maybe more than that. That's just the way it is. And the mining stocks are going to be all over the board. And when you add the Robinhood traders into this, heaven knows what it'll look like. You might see a 50% move on a stock in one day for no other reason than a bunch of Robinhooders are getting in or out of it. So there you go.
Yeah, and as you mentioned, the gold market currently down $112. Even for gold, that might be one of the bigger one-day drops. Interesting, because that also brings us not only below the $2,000 mark, but as well at $1,915 right now, slightly below the 1921 all-time high. So you're certainly correct. We're seeing some big moves today. And I personally agree with you that there'll be maybe a year or a couple of years from now, but we'll see moves that make these look small. Although, I guess the question is, and obviously some people are trading, some people are just looking at this as a hedge against the dollar, but if you do take a long-term perspective, I mean, even if silver is 25 or 35 or someday $45, I mean, you're not going to go back into dollars when, I mean, to me, what seems clear is the Fed can never raise interest rates. You saw a sample of that at the end of 2018. There's all the debt out there that goes bad, the increased interest expense. So if the Fed really has no exit plan, then it's almost like kind of doesn't really matter on some level whether the price is up or down a few bucks, or if you're taking a long-term approach where it seems like these guys are guaranteeing that over the long term, the prices of all the metals are going to have to be a lot higher.
There's a saying that my Canadian friends sometimes use, and it's a variation of what we say on this side of the border. They say that it is written in the rocks. And we say, you know, it's baked in the cake, or some other expressions that indicate that it's got to happen. And if you can tell me one substantive thing at the political, social, economic level that's different today that matters than yesterday, let me know, because I can't think of anything that matters. It's all the same, nothing's changed. The only thing that's changed today is the mood and the temperament of the market. And people are swimming around like a school of fish that has had a rock thrown into the pool that they were in low water. And it doesn't mean anything has changed. There's no flood, the river isn't drying up. So what's different other than somebody threw a rock in the pool?
Well, David, actually, if I may, I'm going to correct you there, because I'm pretty sure the stimulus budget has gone up. I don't see a front page headline on CNBC today, but that's the one change that is something you can really count on, is that by the time they're done, more money is going to be printed.
Absolutely, Chris. And you know, the change that I was talking about would be a change that would obviate the reason for holding precious metals, or that would say, well, gold and silver are too high, they don't reflect that fear anymore. What you just said means that the trend, which was already going in the wrong way for stability and for financial sensibility, is going even more in the wrong direction. So it's even more compelling to hold the metals. And for somebody that was really willing and believed in this thesis, looking at today, and let's say that they had maybe 30 or 40% of their portfolio that they hadn't committed yet, or their money, you know, they could do worse. And I'm not giving financial advice. I'm just saying this is something what I'm going to be considering doing, to buy a quarter of what they want today, a quarter of what they want on any other deep decline, and keep doing that until they had their allotment, only on severe declines. And if you look what happened in March, anybody that bought down into that abyss that we saw in March probably has an account that's 200 to 300% higher today than it was then. It wasn't easy, but that's when you did it. And Peter Groskopf, who was a great mentor of mine over at Sprott, he said that there are two things that really successful traders stand out. They buy when others are selling, they sell when others are buying. And that's very hard. We all have to work on that. But if you can do that and do it sensibly, you will persevere, and over time, you will profit greatly. You have to understand yourself. You have to understand the market and your goals and your temperament for risk and all this sort of thing. But if you can do that, you're going to be at the winner's table. There's just no doubt about it.
Well, I appreciate you mentioning that. I like to think that means I'm in good shape. And perhaps that's the benefit of reading and studying all the great things that you and David Morgan do, where, yeah, if you don't really have the context or the fundamentals or the background story, then when you see the price moving one way or another, maybe it's like you're taking stabs in the dark. Yet when you do understand the fundamentals, and like you said, that the only thing that's changed is that more money is printed today than yesterday. And again, I'm not trying to be a smart ass coming on the show. I'm sure there are people who are not happy that the price is down, but having some cash in my account. And again, I'm darn curious what happens with these September COMEX deliveries. So the fact that I can buy September vol at cheaper spot price and vol levels than a couple of days ago has me excited. Although even more exciting than that, David, I'm so darn glad you're here. So we have someone who really analyzes these stocks more than my crude guerrilla math. Although I'm going to throw one out here about First Majestic Silver, obviously a stock that a lot of people are familiar with. And I've gotten a lot of questions and feedback in the last week. People see silver rallying, and a lot of the miners, I mean, they're up. But to put this in context, on December 30th of last year, so basically the end of last year, the silver price was $17.93, and First Majestic was trading $12.41. Okay? So now today, First Majestic is currently $11.44. So lower, actually, First Majestic is $1 lower, while the price of silver is $6 higher. Now, obviously, there's a lot of factors that go in. It's a company, you had mining shut down and different things, but I think people are uniformly surprised that with the type of silver move we had, that a lot of the miners, specifically First Majestic, are not higher. And fortunately, this is your area of expertise. So any thoughts you have on that?
I think if people think that there's some kind of a magic correlation between the price of the metal and the price of a stock on any given day, I think that they are missing something really important. You want to look at it over time. Keith Neumeyer is one of the best in terms of managing a primary silver company. He's got one of less than 2 dozen in the world that are primary silver companies. The last two runs that we had up into 2011 and into 2016, that 6-month bull run that we had, outperformed almost everybody else. And to think that First Majestic is going to be an also run now, I think is misunderstanding the great depth of experience that he has, and the fact that the stocks and the metal do not have to be correlated on a day-to-day basis. People say the same thing about gold and silver. They go, oh, gold has been up 3 days and silver didn't do anything. That's exactly what it did in the greatest bull market we had before this one, up in 1979 and 80. I remember seeing gold sit there for weeks while silver was rocketing higher. And then all of a sudden, silver flatlined for a couple of weeks and gold went up for 2 more weeks. So that's just the way it is. What you do is you use that as an opportunity to add to the one that you're lighter on when it gets quiet. I do the same thing with stocks. There's a couple of mining stocks that I follow, one in Australia and one in Japan. And I know that they have great projects, they have long-term prospects, they have people that have been and done before, And just because that stock is quiet while others are moving up doesn't bother me. I go in when the bid ask is narrow, I add to it, and sooner or later, sometimes within days or a couple of weeks, suddenly it's moving up 30%. So that's an opportunity. It's a gift to you to go in when it's quiet. If you believe that Keith still has what it takes and he has the properties, then you would be buying in here in tranches into weakness and say, my goodness, I'm now able to buy this stock $4 cheaper than I could have, regardless of the price of silver. But you don't buy all you can afford. If you want to buy 800 shares, then you buy 200. And if it drops another dollar tomorrow, you buy another 200. You don't buy the full amount. And you start cheering for lower prices because you're buying in tranches. You're not trying to pick the bottom. You're trying to fill your basket at the best price possible, whether it's First Majestic or any other silver or gold stock you'd like to discuss.
Yeah, and David, trying to behave myself and pay attention, although I may have been eyeing an offer on the First Majestic September 17 calls that are down quite a bit today, because everything you said makes a lot of sense. And I appreciate you pointing that out where, I mean, I could agree that, you know, if silver goes up, theoretically the miners should go up. But to me, that's the key thing that I learned from the trading floor, that there's what I think should happen, or maybe what I want to happen, or what I think is fair. And then there's what is going to happen. And perhaps they all have their rightful place in the analysis. Although when we learn to integrate those, again, like you said, that's what allows, because I mean, look, the world's always going to go the way it is. And maybe it's just what we can change is the way we interact with it. And like you said, when we do that, that's when you can come out ahead in these types of markets.
Exactly, Chris. It's not what happens to you, whether it's the markets or anything else. It's how you respond. And if you really want to know how to respond in extremis, read Deep Survival, where it talks about all sorts of things where what separated the winners from the losers, the people who survived and those who didn't. And one of the things about that, you know, they talk about the 5 degrees when something happens to you. If you get cancer or you break a leg or you end up in the middle of the ocean in a rowboat that's got a hole in the bottom of it, you go through these different layers, and the last layer before death is acceptance of what's going on. But the survivor has one more layer, and it's called commitment. You accept what's going on, and you make a commitment that, by golly, you're going to do whatever you can and whatever it takes to survive. And you get calm, and you look at things, and you look at what's going on, and you ask yourself, has anything changed about what I want to do? And if it hasn't, then you act. And I'll give you an example. Do you want a specific stock? And it's not an investment device, but I'll tell you how I responded this morning. If you'd like, I'll tell you about it.
Yeah, please, please.
All right. I've been following Novo Resources in the Pilbara in Australia. You know, Bob Moriarty and others have written about this. One of the best geos alive today, in my view, in the world is Quentin Hennig. And they had at 7:45 this morning, they had an announcement. They'd announced it yesterday that they're going into production by using a mill nearby and by diluting their shares by 15% to create more money. And they're going to have a very low cost, environmental, small footprint production of massive gold resources that they have in Australia. And that, I believe that stock has the potential to become a massive winner over the next few years, and may go on for the next 20 years, increasing production. And I believe the view that they have is a sound one. And every time I research it, it comes back stronger in my mind. So I have a good sized position in it. I listened to the discussion this morning. I see it's down 25 cents. I bought all the way down into that, and I added 30% to my position. That to me is one of those Pareto principle winners. The 20% of your stock that's going to give you 80% of the return. Now, I could be wrong, but that's me. I'm not advising anybody else, but I'm giving you an example of how I think and how I attach to people that know what they're doing and have a track record of success. And that's exactly what the second thing was that Peter Groskopf said. He said the second thing that puts people in the winning circle, the big winners, is that they understand that 20% of their stocks will give them 80% of their profit, and the other percent, 80%, will probably detract from that. And when I heard that, I went and looked at my own 30 stocks, and by golly, I found 6 that fit the criteria in my mind that he discussed, and I couldn't believe it. They were doing better, and a couple of them I didn't have enough, and I added to, and immediately my portfolio started doing well. So we can learn from others that know what they're talking about, that have a track record, and we can add that to what we're doing to make us better traders and keep us calm. Just like the saying that I use in my presentations, miso no kokoro, which is Japanese for mind like water. You look at the calm water and you are just as calm as that in the markets. You're not frenetically buying and selling. You're not panicking at a $4 drop in silver today. You're going, this is an opportunity. How can I benefit from this? Because my long-term view remains unchanged. If it has, if you think it's wrong, then sell everything and get out and go into Apple and Facebook and just leave this sector altogether. But I'm not going to do that. Sorry.
Well, at least you didn't say Tesla. That would have hurt to even hear it and think about it. But I think that's some great advice you're passing along there. And one final one before we wrap up. I think this would be a fun one to get your answer to. We hear a lot, about in past bull markets about the 10 baggers or 20 baggers or 30 baggers. And certainly when you look at the profile of silver, seems like the commodity is positioned to produce some big moves in the stocks. Let's say, someone is of the school of thought that silver is going to go to $50. Is there, and maybe there's a particular company or even if it's just a particular type of company, what are some of the stocks that could fit that profile if we are to experience a even bigger jump in the silver price?
Well, if we're going to see, and by the way, I'd like to preface this by saying a little bit about the Morgan report. We're not there to give you a bunch of fish. I mean, you can look at our asset allocation tables, and they've done very, very well. If you want to stick with that, you can. But really, we're a teaching mechanism. We put our ideas out there. We go to what we think are some of the best plays, and we can't do it right now because of COVID. But when we can, we do video interviews on site, which very few letters do. And we give you information to help you add to what you already know so that you can become a better trader and fit things together the way that work for you. So we're not there to spoon feed you. We're there to help you learn and end up in the winner's table. And the book that David and I co-authored, Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, we not only tell you how to make big money, but also how to keep most of it. And no other book that we know of does that. And so I'd like to preface that by just saying that about what we do. And this stock that I just mentioned about Novo, it's not in our asset allocation table. I like it on my own. And I encourage people to have some of our stocks that we recommend and some that we don't. Nobody can cover all the bases, and you can uncover some real nuggets that we might miss. But if you have the tools that we've helped you sharpen, you can go and find those rather than miss them. And that's what it's all about. So I would say this about your question. I would look, if we're going to see $100 silver or more, which I believe we will, then you're going to find that the good stocks are all going to exceed their 2011 highs. Some of them already have. Some of them, like First Majestic, have not. But if you look at First Majestic, if you look at Wheat and Precious Metals, if you look at Alexco, a number of these like this. If you look at Mag Silver, ask yourself, where are the 2011 highs and how far are they away? If they're a long ways away, that means they have a lot farther to run. And look at it that way. And some of these penny stocks that are still selling at under $1, that could go to $3, $4, or $5. And I think what's going to happen, and David Morgan has profiled how 90% of the profit comes during about the last 10% in time of the entire bull run. Okay, and this is Incrementum came out with a quote just like this a few months ago. And so 80 or 90% of all the money that you might make in this whole bull run, which could run 18 months, it could run 5 or 10 years. We think it could run 2 or 3, we just don't know. But there'll be a point where you think the top is in, and it won't be in. And suddenly, over 6 to 9 months, the prices could double or triple again. So this is the great thing. You don't want to stay too long. but you also want to be selling on the way up, but you want to have something so that you don't end up like palladium, which what happened to me. And I use this as a cautionary tale in my presentations. I thought I was a major success story by getting rid of my palladium stocks at about 1150 palladium. It was a double high from 20 years before, when Ford Motor Company had sold their palladium for a $1 billion loss. And it went to 950, and I was patting myself on the back. And then it went to 1200, and then it went to 2800, and it's still there. And I'm not patting myself on the back anymore. So if you really want to take as much as possible, but not risk it all at the top, you need to be selling into great strength, but keeping a portion so that in case you're wrong, you can ride it up to another 2 or 3x. And that's what I think our book is going to help people to do in a way that we haven't seen expressed anywhere else. So I'd recommend that book as a self-serving comment here, but we have some of the answers, and with what you may have as an individual, you can put it together so that you can keep the majority of what Mr. Market offers you in a lifetime bull market that's not going to come again. This is going to be one for the ages, in my view.
Yeah, I certainly agree with you on that. And David, perhaps just in wrapping up, you can mention one more time where people can find the Morgan Report, what they can get in there. I'm proud to announce that I am a subscriber as well. And you just touch on that before we close out.
We really appreciate your support on this, Chris. You can go to themorganreport.com. David has a free weekly letter, which I don't know, has 50, 60,000 people reading it. Many of those people they come to understand the value proposition that David Morgan and the Morgan Report team offer, and they become subscribers. He has a subscriber opportunity. You can do $50 a month, which comes out to about $600 a year. You can do for substantial savings of $497 a year, and he has a premium service at $2,500 a year, which enables people to be involved in private placements that we profile on the monthly mastermind and other types of things. Great information, but any level that you participate in with David's teachings, you will find that you will receive great value. And I'm proud to be associated with it and can do my contribution for it and to learn from David. And he's one of the very, very best. And he's probably the best top picker I know. He's the one that will tell you, I'm not that good at picking bottoms, but I'm good at picking the top. And he picked the top within 1 day of the 2011 top. And he's going to try to do that sort of thing again. He might not hit it within a day, but he's sure likely to hit it so that you can keep most of what you earn. And you might still want to hold on, but at least take his advice pretty seriously when he decides to tell you what he thinks, that it's pretty much all over here in a few years.
Well, I'm a big fan. I think we're going to have him back on the show soon, although I know we're planning on having him involved in Silverfest, which I'll tell you about after we wrap up. Hopefully we'll get you on board there as well. Really a party to celebrate the great things that are happening, today's price decline notwithstanding. So David, sure appreciate you joining me here. Again, folks, the link to get access to the Morgan Report, which, especially when you think about if we are going to see a rally, and then I don't know whether it's whichever level of membership might be appropriate for someone. I think you're going to get your value on that one. I'm excited. I'll be resubscribing soon. And I love that you have all those write-ups on a lot of these companies. So if there's companies people are hearing about and you're new to it, you can hear David Morgan and David Smith's opinion on those, which I love. And again, I love the advice you passed along here, David, and we'll look forward to doing this again soon.
Thank you very much, Chris. It's been a privilege to be with you. I watch many, if not most of your podcasts, and you contribute great value to this sector. I mean, you are one of a handful of people that you can actually learn more from, not just the people you interview, but your own perspective on it. You can learn more in maybe, say, 5 or 10 minutes of what's going on with you than maybe half a dozen podcasts from somebody else of lesser capability and lesser willingness to learn. So thank you for inviting me, and I look forward to hearing more about your Silverfest situation.
Yeah, well, I sure appreciate that. That certainly is quite an honor from someone with your background and track record. And just excited to get to talk with you today. And again, we will have to do this again soon.
Take care, Chris.